Hey, Trader Tim here, doing a trade recap video for Thursday, November 9th. The first thing I want to touch on is the daily chart, and we've got a big, the full halfway back from our highs earlier this summer, and that is just kind of slowly rounding out up here. You can see how steep we were going up, basically gapping up, and then strong rally, gap up, strong rally. Now we're sort of, the highs are not nearly as high as we break into each day of new high. And we're kind of coming up to this prior swing high. This is the one that we talked about on Tuesday in the live session, that this swing high is what I'm looking for to break, and sort of pairing that break with a close on the daily chart above 44.38. That would kind of validate the, or invalidate, if you will, that would be the break of the 61.8. And then at that point, um, looking to maybe a little bit further move up before pulling back to the 50%. But either way, when we start to roll over, whether it's, from here or way up here, I'm going to be drawing up the next 50% retracement long and watching that level for a possible bounce. So let's go to the intraday chart and talk about some trades from today. Decent day today. Yesterday had a couple of trades as well. We can go through those. Very similar types of trades actually, yesterday and today. And that's typically what you'll see throughout the week. Something will start to stand out as far as, oh, look at these counter trend trades are working really well on Monday and Tuesday, and they kind of carry through the week. Or trading with the trend has been really good the last couple of days, and you start to see those similar types of trades work. So if you have a trade log, just making a little note of like what the setup is. Is it counter trend? Is it a micro after a halfway back? Is it a 1 minute hammer? Then you can go through and kind of see, oh wow, look, all of these counter trend trades this week were big runners, and my trend trades didn't end up being big runners. And sometimes you can glean some good info off of there. So this morning we gapped up, sold off in the first 15 minutes. We did not quite fill the gap. We overlapped the last candle, but the actual gap fill was down here. And the 15 minute is still in play here from that low at 96 and a quarter. So we'll see if it rolls over. Otherwise, the stop is above that 15-minute candle's high. And the first retracement trade from today was at 7:49, so that's 19 minutes into the day. I'll go to a super small time frame here and back up on the 512. So this first setup was just a small double bottom where we had a low tick of the day, and back her up. So that was in here, right down here. And so this, whoops, wrong day. 7:49 today, right in here. So that was this low area, and we came into a low tick right here at 7:49. Actually 7:40. You can see 7:47, and that was the first leg here, and then we bounced again. That made the double bottom. This was the next kind of smaller retracement, and then the full retracement was higher up. Was higher up like that. And then the other thing to notice, and this happened yesterday, we had just filled the gap. So we came down and filled the gap. That's a really good place to look for trades, especially like bounce trades like this, because that gap has been filled. All the folks who were covering positions or wanted to get out at their close of yesterday can do that, and then that's where you'll typically see if there's going to be a bounce. That's a good place to do it. And so this little retracement long just looked like that. Traded in about 1.25, and then it ripped pretty good. And this one, when you come up like this, straight up, and you have the negative 23 and then the negative 61.8, rather than drawing the next traditional retracement from low to high, I like to draw an extension from high to high. We didn't quite come in and touch the 50% at that point, so drawing the next extension is a good place to like bring your stop up underneath that next 61.8, and then from there you can start drawing up the next traditional retracement. Because we were down here at the bottom, um, because we were coming off of lows, kind of the next logical bounce point to see some resistance would be that full halfway back. So that would be this 4401, and it was also kind of a big, 4400, the big round number right up in here. So if we saw major resistance there, then this retracement 61.8, your stop is just below that 61.8. So that's kind of the progression from drawing the first retracement, 2-point stop, taking the next extension, and then going back to the traditional retracement, and then doing that up again here. That's where I got taken out underneath the 440250 area, 50 level. 440250 was the actual exit, because just round down and then subtract 2 ticks. And all the stuff that I'm talking about here with as far as retracements go, we'll be covering in the masterclass in a couple of weeks. So that will be on December 4th, Monday evening. If you want to attend live, you can. Otherwise, you could. I can just send out the recording if you want. The link to that is I'll put that below in the description if you want more info on the masterclass. So that was the nice little double bottom long here. We didn't make it all the way up to the top of the 30-minute high. This was actually the top of the hour, and some news came out and then rolled back over. And so then the next one was 821, and actually in between those two, I did take a 1-minute long. That was 808. That was this one here. This one was not the low tick of the day, but I liked it because we were at the negative 23 here from this 50% retracement, and it got a little bit of a push and then rolled over. So not not the follow through that I was looking for to get to the next 50% retracement like that, or even the bottom of the 30-minute range would have been about 4 points. So that one, from that point, we just kind of slowly went sideways and drifted down a little bit. I did have another retracement though, short after the tick divergence at 821. So all of my times now, you'll notice on my x-axis, are in mountain time because we are on. I'm sorry, we are don't do daylight savings time here in Arizona, and so things shift between Pacific and Mountain. So very confusing for people who don't live here. If you live here, you never have to think about changing your clocks. But for everybody else that you're trying to call, or looking at various times, it can be a little bit confusing. So when we're talking 8:21 for the short, that is 51 minutes after the bell. And so that one, 8:51. The low tick that was made was back here at 8:07. I'll zoom out a little bit. So here we had a low tick at 8:07, and then 8:08 we made a lower tick. And so this divergence, if you will, is kind of initiated back here, where we had a low tick at lows, and then we break lows by 1 tick. And so we have a new low price. And then we bounced, kind of came down, made this little triple bottom, and then got another push down. And then at 8:30, what did they say? 8:21 on the 512 was this here. How we pushed lower below these couple of kind of made 8:21 in here. This is that triple bottom, if you will, and you could look at it as a couple of ways. Triple bottom, a bear flag, where you have kind of the sideways flag like this. Here's the move down. Here's the sideways action. Just really what I'm noticing is the market struggling to get back up into the 30-minute range. So when we're trading just below the 30-minute low, and we're at the negative 23, and here's one opportunity to bounce, two opportunities to bounce, it's like, okay, we were right up at the 30-minute low here and we rolled over. So drawing from that swing high down to lows is what gave me that 821 short setup. And then same thing as earlier, kind of traded in a little bit, about 1.25 points, and then rolled over. And then with that one, just drew up the next. Once we broke this anchor points low, trailed my stop above the 61.8, rounding up, so 91, and then adding 2 ticks, and then that brings you up to 91.50. So just kept me in this little bounce here, and then drew up the next retracement short like that. Put the stop above the 61.8, and then drew up the next retracement short like that, and that's the one that took me out above the 61.8 here, 88.75. So the first one was like almost 7 points, I believe, and then another 2 points on this, a little over 2 points on the move down, plus the 3 point first target. So, even on my trade log, I have everything divided down to 2 contracts, so you can kind of take the numbers that you see in the log, and if you're trading 4, you can just double them. If you're trading 2, then that's the actual number. So it just kind of simplifies it a little bit. So even with 2 contracts, you're at 15 points with just those 2 trades on the day. And if the 15-minute does end up rolling over into the close, then that could be another 20 points. So not a bad day. Just wanted to touch on yesterday real quick. I had one long setup, and it was kind of similar to today. And then we'll get you out of here. So 8:07. So 37 minutes after the bell. It was a long, low tick after the day after the gap filled. So this was the gap fill right here. I'll go down to a 5-minute chart. So we gapped up yesterday, rolled over, filled the gap right here. And it was at that point right here that we had a low tick of the day and then broke the swing high right here, drew up the little small micro retracement long in the 512, and then this one I just trailed each candle. I believe, what was my exit? Was 44.050. No, this one I did the same thing as today with the extension going high to high. You can come in and trail each candle when it does get moving. I like to try and be a little more conservative at the start of a trade and give it some wiggle room. But when you get a move above the -23, above the 61.8, just like the trade today, going to the extension as your trail stop instead of using the full halfway back, just brings your stop up a little bit tighter. You can see the difference. It's not a huge difference on these smaller trades, but you're talking 4,400 versus 44.99, so a couple of points. And so this one didn't get much follow through before it rolled over, and that I believe had come up to the full halfway back as well. So very similar trade to yesterday or to today. 3 point move up plus the 3 point first target, and really haven't had a whole lot for 1 minutes. Just those hammers and inverted hammers have they've been present, but not as many setups and not as much follow through there. The retracements have really taken off this last couple of weeks. So that's the nice thing about kind of implementing one of these 3 strategies or kind of putting them together. You got the 1 minute, the 15-minute, and the retracements. The retracements are definitely my bread and butter, but sometimes when it's slow, especially in the summer, we were catching a lot of 1 minutes, and now the retracements have really picked up again as volumes picked up, and so it's a really good time to be trading. And like I said, if you want to learn more about the retracement trading and the 512 and the nicey tick, that masterclass in December is a great place to do it. You can find the link below in the description, and if you have questions, drop them below there as well. Thanks, and we'll talk to you soon.